The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Technical Friday, Basil Chapman, October the 25th. Tiger Technicians Hour. We're looking at the E-mini has gone to a peak E in the 1-minute chart. The 5-minute chart has gone to a leg D, and the 10-minute chart has gone to a leg D. I think we're 10:20 in another 10 minutes or so. We'll get the next tranche of buying and selling coming in, so it's going to be very important. But I want to go through these charts really closely. I'm not going to take too much time, other than to say, let me just get to this INDU. So I go to this chart that I show my subscribers every day. Okay, subscribers, I had trouble sending my charts to the to my Tiger, to the form that I send every day, which picks it up and sends it off to the computers at TFNN, and that gets generated and it comes out as the Tiger for my opening call. And it comes out as the newsletter, gets sent to you, emailed, comes up, says there's a post for you. I'm hoping that's going to be all settled today so that I'm able to do my market overview, hour-long overview that I do every weekend. Usually, for a long time now, I've tried to make it on Friday, give you some time to look at it whenever you have a chance. And even more important, we'll see if we can. It just didn't. I had saved it, but the directory that it goes to didn't. It was the first time this has ever happened. It just didn't pick it up. It didn't show up. Everything that I save and post there, that's where it goes. So we'll see what happens. All right. So with that said, I'm not going to take too much time other than to say I've been talking about this alternate count in the Dow for at least a little while. And that we had a question yesterday about the phantom peak. Well, if you go back, I got to go to this chart right here. It's a little messy, but I'm going to show you this. The very big pink, I changed the color. The pink notation shows you that the low that was made August the 5th, where we actually started new long positions, a lot of long positions, different areas from that day, went to a peak A, and then there was this within 30 cents. Look, you made a high, not you, but the Dow Industrials made a high of 40,907.32 on the 19th. The very next session, the 20th, it went to 40,909.38. 6 cents away, 7 cents away from a new high. And I used that, if you remember correctly, I used that very successfully for a peak C1, C2. That's where there are occasions in the Chapman methodology that I learned by trial and error, very expensive trial and error, that if you get parallel highs, or almost, if you see in other technical tools, I usually use the on-balance volume or the slow stochastic or even the retro strength. If there's a little hiccup that say, wow, it just missed by a fraction going to the peak D, which in the Chapman methodology, you're always looking for 4 higher peaks, at least in a buy mode to a peak D. It could go E, F, G, it can recycle, but D is your objective. The C1, C2 meets every one of those criteria. So it's not like I'm faking or anything like that. In the Chapman view, there's no cheating. You want to the last letter that you have is the letter that's going to give you the most information, and you want to be correct. So that's it. That pullback in the S&P was tangible. It was functional, and it worked, and it had a very sharp pullback. So I said I think this is exactly the same thing with a phantom peak right there. And if I call that a B, I would have got to a perfect D instead of a C at 41,585. Why is it important? Because that's where you had your sharpest decline from the August 5th low. And then what happened is if I put an up arrow in there, I get a perfect, instead of a D, I get a D, I get a brand new A, B, C, a little digestive phase, and then a D, and that becomes an E where it says C. And everything there is perfectly legitimate in the Chapman wave notation. There's no fudging. Remember, you can't form-fit a technique, because what's the point? Everything gets form-fitted. So this is a legitimate way, and it doesn't make any difference. Why? Because whether it's a C or an E, there is a pretty sharp pullback, one of the sharpest pullbacks we've had since the September low, and therefore I have to monitor the 9-period exponential moving average, because that's going to be the clue. But what would have happened if I'd recognized that as an E instead of a C, I would have said, for those traders amongst you who are wanting a very short-term trade, and I would have chosen either 3 times short the Dow or 3 times short, we're already 3 times long. I don't like to mix those things up too much. I would have maybe 3 times short the S&P. It wouldn't have made very much money, man. Look at this big move up and the Chapman falling X formation. What's the falling X formation? Another technique. Wow, I have all these techniques. Let me just get there. It's right there. There it is. Okay, this is a technique that we're talking about right now. It's called the Chapman wave falling X formation. It makes lower, it goes to a peak D, E, or F, and then it makes lower highs, much lower lows, and all of a sudden it finds some support, makes it either a V or a cup-shaped formation, and takes out that trend line. Where's the trend line? Right there. Let me expand that a little bit so that you can see what I'm talking about. There it is. It's a little declining cone formation, and what happens is it then tries to tackle the next left side high. Well, there is no left side high. The left side high is the all-time high, which is at 58, 78, 40, 46. All right. So that's so far. Everything looks good. We've not set up any shorts. We only have long positions, and in those long positions, we've taken little bits off. We've raised some cash. We've added to some. I needed to also go to this because it's Technical Friday. I used this yesterday at about this time. No, it was a little bit later. We were talking about the dreaded H. What's the dreaded H? Also another Chapman wave technique, and that's this pattern here where there's a bounce. Whoops, see, let's go to that over there. Okay, where there's a bounce off a down move. So I like to look at 3 basic patterns: straight up, straight down, cup formation, arch formation. The dreaded H is when it comes down sharply, arches over at a peak A or a B, it fails, takes out the left side low sharply. It could go 1-to-1 to the other side, but if it holds, it can create a cup formation so that the H becomes a very powerful cup formation if it takes out the arch high. All right? So in this particular instance, what we're looking at is, all right. I don't even remember how we got there. Usually I follow right through. Anyway, it doesn't matter. The fact is that the weekly chart has gone to a leg C. It's still very strong. It should go to a D. Why? Because in the Chapman wave methodology, buy signals go to buy. If they're upgraded to buy mode, they invariably go to at least a D, and we're only in a leg C in the weekly chart. And a leg F in the monthly. I'll be back in a moment. Basil Chapman, Time Conditions Hour. What to discuss.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So just remember, we spoke about this at the beginning of the show. I said we made a peak in the 1 minute chart. And you remember, you can use Fibonacci, you can use unbalanced volume, you can use volume, you can use whatever technique you want. It doesn't matter. When the tide is rising, every technique is successful. When the tide is falling, every technique is successful. Because why? The tide is the arbiter of the price trend. So what happened here is we went to a peak E, but the 9-period moving average, look at that, was still strong, and it's still strong. It looks like it's about to turn down, but you don't know, right? But all we've done is we made slightly lower highs and slightly lower lows. It's gone to a peak D in the week, I call it the weekly because it's the middle chart, in the 5-minute chart, but that price is still way above the 9. The 9's way above the 14. So I don't actually see any short position right now. And look, the 10-minute chart has gone to a leg D. It's still a D until this entire bar completes. All right? I just wanted to show you how you can use as many techniques as you want, but look at this fantastic technique. I'm looking at this and saying, okay, from last night at about 2 a.m. in the morning, when the 9-period moving average crossed positive at about 58.47, that 9-period moving average, you can use any, look, I've even got the fib numbers here, everything. It doesn't matter. This kept you in the trade all the way to right now at 58.95. And it's still showing no signs yet of the green 9-period moving average turning negative. Of course, if it had to do that now, you'd have to plunge to about 58.70, about a 25 point move. And yet, look at this so far, 10-minute chart, very positive. 5-minute chart, very positive. And the 1-minute chart's struggling, but it's still green. Isn't that a nice technique? One simple technique. And yeah, so the reason why I was showing this and the reason why I brought this up was because I wanted to show you the red H pattern. the reverse green Y pattern was really what we were talking about yesterday. And I was saying, what happens when prices either come down in the H pattern or to the upside in the Y pattern? And I used this as an example, stock that we've had for quite a while. SOLV is the symbol. SOLV, not SLV. And I was talking to you about it. I said there's exact price match to this particular plumb line. It's gone to the Y. And we were actually right here yesterday. And I said, all right, if I'm anticipating that there's a cup and a handle pattern, and that the handle, not one of my favorite patterns, unless you were timing it perfectly. We timed this one to add to our long position from the mid-50s. When it went to 73.40, took little bits off, and then we wanted to put it back. We put it back over there at about 67, and took another little bit off. And then I'm talking about this, and I'm saying I'm expecting the handle to pop to the upside. I didn't even see this until much later on. It not only popped, it went to 76.05. Evidently, there was some talk about spinning off a filtration center or whatever it is, Solventum Healthcare spin-off from Triple M, and it spiked to 76.05, trading right now at 73.50. So this is the same dreaded H pattern that said if you close, not just spike, if you close, in this case on the upside, sharply above the left side lip of 73.40, in this case, there's a real good chance you could at some point fairly soon do a 1-to-1 of the cup formation to the upside. So I thought I'd use this because I originally said I'm going to use this as a Chapman Wave instant restart example. Then I said, no, it's gone too high. This looks to me like it's just going to go to E or an F and then pull back. That's exactly what it did. And look at the weekly chart in leg D with a doji candle, Friday close. We're going to watch this closely next week. So far, it's done great. So I just wanted to use those as examples. Now look at this. So what did I say? The 914 was such a strong medium that now we've gone to a leg E in the 5-minute chart. And this has gone to a leg E in the 10-minute chart. And has this broken to a new move to the upside, or is this a continuation pattern? Well, I don't know. So what I do is I call this an F/A. Why? Because I have no idea yet. Everything's positive. So there's no real decisions that I need to make at this particular point. And the MACD is just about to cross positive in the 1-minute chart. So the live right now is exactly what we do for my subscribers in daily, weekly. Now, I wanted to show you this. I'm going to skip everything else. I wanted to go to this because, look, I'm going to type this in. Try your best not to look to see what it is. Just look at the chart pattern. The left side is the daily. In the middle is the weekly. On the right is the monthly. And look at this right. You see this cup formation? We just saw that now with Solventum, right? The cup formation. And then what does it do? It goes to a D. In this case, that was a peak B at 70.60 on the week in May of 2021. Plummets down to the 40s and then comes right back and makes a D. So it negates that B because inside we had peak A, peak B, peak C, and now leg D is priority. Pulls back. And what are we doing? We're going from a cup to a handle pattern. And we went to an all-time high. It's only a leg C, maybe a peak C with a peak C1, C2. I use that as a double top, pull back sharply from the 71 area down to the 60s, and then it popped up and it went to a leg C this week. There's no question that it's going to make a peak C. There's no way it's going to go from 69.94 to 72.23 in the next 3.5 hours or whatever it is, 4.5 hours. So this is the cup formation. Now you've got, there's no other way that I can count it. This is a peak C. It's almost like it's just sitting there. It looks like it should be a spike D pulling back, but it's holding. The 9-period moving average is holding. But I want you to look at this monthly chart right here. See this monthly chart, and now you can see it's the iShares Transportation Average ETF. It's so important to see the transports moving to close to all-time highs or at all-time highs. This is not Dow theory per se. because the Dow theory per se is a little more complicated, and it also was a much different instrument when you had a very much simpler Dow transports. Now you've got rails, you've got trucking, you've got airlines. The airlines just clobbered this index before. Now look at this. Would you believe that JETS, the U.S. Global JETS ETF, has gone to the 200-period moving average in the monthly chart? Beautiful dreaded H. Remember I was saying that if this particular pattern has a successful left side test in the sense that it quickly goes higher and then closes above the arch high, that becomes a cup formation, and a very powerful one. Well, lo and behold, what are we doing? Here's your arch high at about 22.50 or something, and we're trading right now at 22.82. So that is above that arch high. That's really positive because it says that there's a chance that the transports, and this is so important with the jets leading, jets are soaring. In the monthly chart, starting to improve a lot. Look at this weekly chart. This is a leg, because it's a brand new buy signal to buy mode, this is a leg B. This is the jets, the U.S. Global Jets Transport, and a peak C in the weekly. And now I want you to look at this. And the reason why I made this all elaborate, look at this right side pattern with Bitcoin. I'll be back in a moment. Dow's up 191, S&P's up 49, the IWM is up 186.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Let me just add a question about this. If I could just look at the automated Chapman wave, automated resistance support levels. Yeah, we've got in the 1 minute chart 58.98 to 59.85. A lot of resistance right there. But we also have support at 58.90. So 10 points. I think they could maybe, remember 10.20 is where whatever happened in the beginning. I always look at the market in different phases. There's a 6:30 a.m., 6 o'clock, somewhere around there. That first phase goes to about 8:30. Then there's the whole thing with whatever the economic news is from 8:30 to about 10:10. And then 10:20 starts another session. And that's usually where you start to see if there's any profit taking because there's been a nice move up. Just a whole bunch of things. It's kind of adverse to what happened earlier on. But it doesn't last all that long because the real strength of the market or weakness comes into play about 45 minutes later. So, okay, as it stands right now, that's what I'm showing you. Let's just get back to the story. And this is really important. I wanted to show you that, look at this cup formation in monthly charts. In other words, it goes from a high level, in this case, 78,000, something like that, back in 2021. And then tanks down to the 20,000 area and then comes all the way back and actually makes a new all-time high and then pulls back. So he has a huge deep cup with a handle pattern. And this handle pattern in the monthly chart of the Bitcoin futures, let me just see GBTC, if you can see it better here, because some of you you don't get the futures. Yeah, you can see it in the Bitcoin Investment Trust as well, but I'm going to go back to this because the chart is just a little bit clearer for me. This is just saying that there should be a rally to all-time highs, and if the power of this cup formation, this intense cup formation with lower lows and lower highs, and now starting to make higher lows and higher highs, continues. If there is a move in the next 2 weeks, I would actually say the next week, but I'm going to make it 2 weeks, above 72,200. That's really not very far away. This is, I said before, the weekly chart seems to me you've gone from lower. I consider this was in a sell mode for quite some time since April. I've been talking about this as if the tide turns and this low that was made, I should have put the date in. The date is the week of the 9th of August. So 8, 9, 24. If the tide is now turning to the upside, then what we should see is this is a brand new buy mode. This is a peak B, not a G, but a B, and that we would get a little mini cup right here that says if we break to a new recovery high above 70,000, 71,000, I'm going to make it 71,000. The actual price would be, and this is the future, so that change, the price numbers can change, not the patterns. 70,260. If we could see 70,680, just kind of the top part of 70,000, we should break very quickly to this level right here, which is the high of, what date was that? The high of the week of the 2nd of August. Wow, in 1 week it tumbled. 2nd of August, which has a high of 72,220. So as I say, into that 70, just moving even a little bit higher above this peak right here on the left of 70,260, going just even one point above it. Let's say 10 points above it, would suggest that that's the level that we're going to go to. If we close above that level anytime in the next 2 weeks, and not just close, it needs to close above it by about 15,000. That is really important. And the reason why I bring it up is keep your eye on the right side chart. Here we go. Look at that. This is the not 100% the same, but very close. This is the iShares Transportation ETF. Keep your eye on this. This is way weaker, but it's still got the same bull formation or cup formation that says you've taken out that left side high. You're right at the 200 period exponential moving average. You haven't even been there since 2021, up in the 25 area. So that's very important. So yes. So I just wanted to bring that to your attention because I had a question yesterday about coin, and I said, yes, I do like it. And then I brought up other aspects, but it's not as good a chart pattern at all. So, yeah. So I wanted to mention that. I'm just reading this. Okay, so questions. Now I can get some questions. No, I haven't finished. Technical Friday Monster. Okay, MSTR. I always say monster. Of course, it's not monster. Monster is something else, but it's been an absolute monster. Look at this. MSTR, all-time high, powered right through it, is trading at 242 right now, up 6.11. This is very important because it's an all-time high in the monthly chart, broke out of that resistance area, that uptrend line, and it's only a leg C in the weekly chart. I hope that helps you. Can you post them considering taking profits at about in the 245 area? You know, I don't. You're in this. You've done this fantastically, S&P. I don't want to mess around at all with your trading plan. If you had just had asked me right now, what would you do? I would say because it's a leg C in the weekly chart, I would want to keep core positions. I have no problem with your 244.44 was the high today. I would do one of two things. Either I would say, you know what, right now I know I can get 241.60. If I had a trading stop, it would be it could be lower down. I don't get that right now. I know exactly what I'm going to get. So I agree with you taking some profits, not everything. Just take off, just money management. That's really what you want to do. There's another way to do it. Just have a trading stop so tight, make it 2 points, and just run it up. You could maybe get another 3 or 4 points there. So you take a little bit off now, you split it into two, and you have a little trading stop. If you want to make it kind of complicated, that's one thing. I think I like what you're doing. You had a great profit. Take something off. I just want to get back to this because you remember I was talking about that resistance in the E-mini. Everything looks so great. But now look what you're doing. You're making the rectangle formation. In a long rectangle formation, and this is a 1 minute chart, so a long rectangle formation could be 15, 20 minutes. There's a real good chance that you're going to take out the low, the baseline. So, and if you take the baseline out of 58, say 95 right now, it's going to be a quick run down to the 58.90 area. So 58.90, yes. And then that would start to impact. Then I can put a down arrow for the 1 minute chart. The 5 minute chart is starting to weaken, but it's still fantastically strong in terms of the 914. So only as a trade, yeah, if anybody's short, just put a stop in and just let it go where it is. Look, there's automated 58.94 support. That has to hold. I'll be back. Basil Chapman. Dow's at 157, S&P's at 47. I haven't gone through the indices like I wanted to. Now I can do that. I've got a couple of questions I want to get to as well. I'll do that as well.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model? when you're already spending your energy looking for any possible trade opportunities. Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so look, I showed you this a little earlier, automated Chapman wave support resistance levels. I don't usually have these, I kind of have them on the side. I don't even necessarily look all the time because I have other techniques. Look, the technique that I have that said a long, narrow rectangle can last a lot longer than your patience. Look at this. It is still within the bounds of this rectangle, but it does look like it's making lower highs, slightly lower lows, and it does look from the MACD turning down, stochastic very weak, on-balance volume very weak, and now we've got the 9-period moving average just flipping pink for the first time. Now you're going to see whether or not it can pull back and hold the 58.92 area, 58.90, I'm sorry, that low, or go lower. And that's what I always talk about in my webinars, and especially the ones that I talk about, the large rectangle and the narrow rectangle can last a lot longer than your patience. Eventually, if it's at a high level, it'll pull to the downside, and that's what we're seeing right now. Okay? And now you've got yourself a leg E in the weekly chart. It's in the 5-minute chart. It's not. I haven't got a down arrow yet. I've got my usual pink plus sign above the E, and that's all there is. And the 10-minute chart is still hanging in there beautifully. So you go one step at a time. All right, let's get out of that. And the question came about IBRX. IBRX, immunity bio-oncology treatments. Monthly chart looks just like, nothing much to see, especially since that peak C pulled back from the 200-period moving average so sharply. But intraday, you've got a big spike. So it made a peak D in the weekly chart back in May or so of this year in the 10.50-ish area, came all the way back down, like it looks like a pyramid or Eiffel Tower, straight up, straight down. and now it's got a very big spike. It had a big spike yesterday, gapped up today with another spike. It's at 517, up 96, up 22.78%. So the question wasn't a question, it was more a statement that said, if I can find it, Hi, Basil. Please review long-term IBRX, along with a number of tigers, been in since the ones. Loaded lots of calls yesterday at 370. Wow, it is 516. That's fantastic. Thanks. So this is what I'm going to say. The 200-period moving average, it never went there at all back in early 2024. And then suddenly in March, it went there and it couldn't break and hold above. It went above, but it couldn't break and hold below. That magnet line around about the 555 level was so powerful that it took 2 weekly big candles that look almost like the daily candle right here, 2 daily candles, to go to that D in the 10s, and then it pulled back. And then what happened is it pulled back and it held the 200-period moving average and it bounced. Then it made the dreaded H look, A, fails, takes out the left side low, and it goes more than a 1-to-1 to the downside. Where did it bounce to today? To the 200-period moving average of 555. It hit a high of 570. It's trading right now at 517. So keep your eye on this. So if you want a long-term outlook, all I can say is I open this up. There it is. I'm looking at IBRX, and now I get the big picture, and it says, wow, that move in April was the first time in 2-3 years that it's gone to where it was back in 2021. And if you go back, you can go all the way to the 40s in 2021. So that's your upside potential, and it's a biotech. So I can't do what you do. You do fundamental analysis. You do an analysis based on cycles of FDA approval, of the different phases that they're in. I'm just looking at the price. And the price is every time it's had a big spike like this, big green weekly candle, within 1 bar, within 1 week, it's given back everything. So all I'm saying to you is if you want a long-term position to succeed, you need patience, number one. Number two, you have to do your due diligence, and you never can tell in the biotech area. But the other thing is price is the arbiter of the trend. And for the price to remain strong, you need a good weekly candle, preferably next week. I'd say 1 week hiatus with just a small candle, maximum pullback, and then a higher high. And you want to see on a weekly basis that it can close 2 days out of 3 above 6 I'd say that's too high. 6.64. No, 6.30. Above 6.30, and then treat the 555 200-period moving average as support. I'm talking about this as an ongoing mechanism. So short term, no. I can't get anything right now because the weekly chart hasn't even crossed, the MACD hasn't even crossed positive. The 9 is way under the 14. So it's time and price that's going to make the difference. Anytime that you see it over a period of the next 2-3 months, if it can spike and hold above on a closing basis on the weekly chart, not the intraday business, but on a weekly basis, out of 3 weeks, if 2 of those weeks, it doesn't matter if it's consecutive or if it's split, but 2 of those weeks, if it can touch 6.90, 7.20 at any stage and hold, I would say at that point it has to hold 620 to 590 as support. That's what you want to see. Something's going on, because then you're looking at the tide changing to say instead of all these down moves after a big spike, now you're getting follow through, and it will target. First big target would be $7.63, and the next one would be the high that was made, multi-year high of $10.53. I don't want to go there. I'm just saying you've got to meet those criteria. It's got to be sustainable, really. Okay, next question came in. Let me just do this. So I wrote down last night, MSTR, so I've already got a question about that. ARM. So ARM Holdings, Semos Licensing, had a peak G. There's an alternate count, and I prefer to call this a G at 164.16. And now today, the 9-period moving average has gone negative. It's trading at 144, and it's a peak D already in the weekly chart under the previous all-time high. So this is going to be in the struggling area together with, say, a Microsoft. Microsoft's doing quite nicely. Yeah, it's gone to a leg D in the daily chart. It's up 6 at 430.82. So this whole rotation that I've been talking about, going from former weak to now a little bit strong, this has been coinciding with many of the stocks. I'll be back. Dow's up 125, and then S&P did have its little pullback. Look at this. I'll be back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So with that said, I just wanted to do this one quick time. So look, I have not yet on the 5-minute chart been able to put a down arrow. It's still very strong. And the same thing with the 10. Yet the 1-minute chart pulled back quite sharply. 5884 is the automated support level, and it's trying to get back. And the rule with the narrow rectangle is that it goes sideways for a while. Very often it'll pop once to the upside above it, and then if it takes out the midline of the rectangle, it's almost certainly going to take out the baseline of the rectangle. And this is what it's done now. It's taken it out. Now it wants to visit that once to go into the 5896 area, maybe just once, or get close to it. And that's the test, because if it takes that out on the upside, it goes back into the magnet area, but if it gets reversed, then all of a sudden the 5880 200 period exponential moving average will become the next level of support. That's very important. All right, let me just sum this up. So we've got a rotation going on through all the different stocks, all the different sectors at various times. Even if you go to NVIDIA, you'll see NVIDIA independently has gone to almost an all-time high. It did that cup formation we're talking about, the falling axis, the whole thing. The Fibonacci level can come out now. I'm calling this, at least for now, I'm calling it a leg C in the weekly chart, a leg E in the monthly. So I want to sum this up as briefly as I can. As it stands for me, while we might have had some kind of a toppy pattern in the Dow, I still see that we've got very strong technicals at this particular point. Is there enough rotational, enough stocks in the Dow to be able to go back to the last all-time high? I think there are, if next week we can see either Monday or Tuesday a 200-point move in the Dow. But the other indices are, look at this, the S&P, almost an all-time high. I don't want to fight that. That's a really good action. IWM coming on nicely. So my bias right now is still to the upside.